they can pay any amount that they choose. I think all of these together make a very, very strong differentiation from any of the competitors. I've got a slide up as well, talking a little bit towards some of the features that we've got over and above the others. We're live on the iOS and Android store. I think Rarible only managed to do that recently, and you can't actually buy any NFTs in the app. So I do believe that we're quite ahead of the game, especially when it comes to features.
Yeah, I love the fact that you guys are targeting emerging markets as a marketplace for it. I think it has a lot of purchase in these emerging markets simply because other options from that may not be as available. So I think the DeFi world can do a lot to bring or level the playing field for African and Asian investors that currently isn't available. Wonderful.
Sure.
Any other questions? If not, then I'd like to go to final thoughts from the. Oh, Raj, you had another question.
So listen, Aaron. First of all, thank you. And as you know, I've always been very transparent. But I'm learning about this space, and I've learned a lot, sort of being involved as an investor in Moment. Could you talk to us a little bit about the sort of process as a customer? What's the customer process? Number one. And the thing, what you always told me was that you are cheaper than anyone else. And why are you cheaper? What's making you cheaper? Because I think that's kind of the thing that I look to. Is it something that's defensible? Can you carry on being cheaper? I can be cheaper. I've got a big balance sheet, right? So what's making you cheaper?
Yeah, so there were two key questions there. I think I'll tackle the first one around a customer. And even that one breaks down into two, because we've got business customers and ordinary just users of the application. So for ordinary users of the application, you sign up. This is why I say it's like a nice bridge from Web 2 to Web 3. So you sign up with a username and password, something you're super familiar with, and everybody knows how to do that. We generate a crypto wallet for you behind the scenes, and we keep it encrypted in a vault. And then you can link your MetaMask or whatever else if you want to import some other tokens or export your tokens out. So for a user coming on for the first time, it's really simple and straightforward. It takes less than 2 minutes to create an account. And then to mint an NFT, we walk you through that process. So when you create an NFT, and I think this touches on the question that Laurie had around the process as well. When you're minting an NFT, you choose your asset. It can be an image, a video, or a 3D file, which we also support augmented reality for. You can then choose your rights, which are baked into the smart contract. So you can choose personal use rights or commercial rights. Then you choose your pricing model. So is it a flat rate or collectible? And then your royalty splits. Beyond that, you post your NFT, we mint it for you and put it on the marketplace. So we cover the minting fees. The reason why we can do that is because we charge 15% on the first sale. So that recoups all the upfront minting fees that we've done. We have also done some really smart stuff around how we structured our smart contract. There's ways that you can structure your smart contract such that you use as much of the non-gas fee functions as possible to reduce the cost, as well as we're also staking on the network, which means that we make a fee back for as long as the network operates. And that also helps us offset that cost. And that's why we think we have a really strong defensible moat in terms of price. That being said, there are a lot of blockchains coming out now with super, super low minting fees. And we think the winner in this space is going to be someone who supports multiple chains. It's not going to come down to which chain you support or I think what that cost associated with that is. So that was kind of the customer question. Your second question again, Raj, if you can just, and I'll try and keep it quick because I know we've got another pitch.
No, I've got so engrossed in the first question, I can't even remember what my second question was.
No, so we are running out of time. So
Yeah.
we'd like to go to the investors and get final thoughts. Laurent, would you invest?
Yeah, definitely.
Excellent. Quick answer. Awesome.
Definitely.
And just full disclosure,
Yeah.
I'm an investor in Moment. I'm also an investor in the next company. But that's not why they were chosen. But,
Sounds dodgy, Jim.
full
Sounds
disclosure.
dodgy.
They do sing in their car.
Not reassurance
They do
before.
karaoke, I think.
Yes, you guys need to come and do some karaoke with me. That's a prerequisite.
Well, Jim, I
I'll
think
do it just for a ride in the Tesla.
I think the company is right up what we're trying to do at our ventures, and it's right up our alley. So we're definitely gonna make an investment. So now we have to look at the you know, what's needed, the terms and everything. But you know, we will definitely be in.
Excellent. It's good to hear that. Glad to have you as a co-investor again on another deal. Laurie, what are your thoughts?
Yeah, I'm super interested. I definitely want to talk further. You've done a lot of interesting things around the model that make it more emerging market. And I like the business angle with the APIs. I think in general, there's big funders in the space, right? Andreessen's got billions and billions of dollars. They're supporting Solana, you know, their own chain. So I think, you know, the differentiation is important. There's a lot of money, you know, in the system to invest good companies. So I'm very optimistic for you.
Thank you.
And then question to you, Raj, because I know you already invested, but would you re-up?
So I think the truth is that, you know, I invested with very little understanding of either what Moment does or what an NFT is. I'll be just honest, right? I mean, and I like the concept, and I've tried to learn more, and I think I'm very impressed with what Aaron has done over the last 1 year, and I've been following his journey, and we've been connecting and talking a bit. So I would consider re-ing up. I need to talk to Vishal, and you know, we'll sort of make a decision. We need to look at terms, etc. But yeah, so that's perhaps the answer is yes, but I just need to sort of check back with my partner, but I'm very impressed with what he did. The other thing that perhaps quickly is, you know, one of the things that worries me with all of these spaces is that, you know, you can be the cheapest, but there are people with much bigger checkbooks than you, right? And they can make it zero. They can give people money to, you know, they can do an Uber on you, right? So it becomes free. And how do you compete against that? But perhaps that's not for today, but we can have a conversation about that.
Well, wonderful. Thank you very much, Raj, Laurie, Laurent, and thank you, Aaron, for the pitch. And best of luck in raising your round. I think we got a couple of intros and commits from this session. So hopefully, good luck with that.
Thank you so much, Jim.
Are people
everybody.
actually investing right now on this? Because nobody knows valuation and anything, right? I mean, how does that work?
Yeah, so what happens on stocks is there's an intro request or a reservation for being, and then there's an automated introduction after the session between each of the investors.
Okay. So a bit like what we did in the NS before. So it's not quite click a button, pay your money.
However, one of the great things about stocks is that they will even facilitate that process going forward. So we did that on a very manual basis, but they will automate that process. And in our case, for example, because we pitched on stocks, they actually created a roll-up vehicle for us to roll up all the folks who committed through the stocks platform, which was great. It was
that's cool. That's very cool.
Removed a lot of administration for us, which is
okay. That's very cool.
Yeah.
So in our case, we will have the follow-up or the, you know, I mean, what would be the follow-up from?
Well, you could.
You just come and talk to me, Laurent. We'll talk together. Don't worry. We'll sort it out.
I'll make the introduction, but you have to sing to me first. So
we got it.
All right. Well, great. Now over to Michele and Julian. I don't know who's presenting. While you're putting your presentation up, I want to actually do a quick advertising break and let everyone know who's watching that Untapped actually has opened a community round that we're basically allowing anyone, even non-accredited investors, to invest in Untapped and own a piece of Untapped. So just to clarify, what are you investing in? Well, we're an investment firm and we do investments, but separate from that, we've developed an investment platform that we call Smart Asset Financing. And we believe it'll make it easier and more profitable for investors worldwide to invest in Africa and other emerging markets. And we're making that platform a digital platform that will eventually allow DeFi investors, crypto investors, to invest in emerging markets. We've gone from $0 in revenue from this business model to a revenue run rate of about 1.8 million in less than a year. So if you're interested in reinventing how profitable investing works in emerging markets, you go to our website, untapped-global.com, and click join us. And it'll take you to a crowdfunding page that allowed accredited. We'll be raising an institutional round starting in May. So this is really the last chance to buy in at the current valuation before we announce our DeFi strategy, which is pretty exciting. Great. Now over to Michele and Julian, or Michele from Inspira Farms. And again, full disclosure, I'm also an investor in this company. But it's just a testament to how incredible the founding team is and the current management team and what the problem they're tackling. Over to you.
Thank you so much, Jim, and good morning, afternoon, and evening, everyone. Probably I'll just get to it as the 120 seconds started already. So I'll Michele Bruni, Inspira Farms, one of the co-founders and chief commercial officer, agroeconomist by training, and I think entrepreneur by nature. Based in Italy, and a pleasure to be here. So at Inspira Farms, we develop and deliver cold chain assets for fresh produce in Africa, and we're here today to try and raise $600,000 of convertible loans. So there are massive problems for the sector that we serve in Africa. Infrastructure is virtually absent and very expensive. And without cold chain, the losses can be as high as 50%, generating very high emissions and a lot of missed market opportunities. So what does Inspira Farms do? Inspira Farms reduces losses while increasing shelf life with a lower than competition OPEX, and providing our customers with access to data, and therefore increasing our customers' bottom line and generating impacts. Our drivers, or our drivers for growth, are really based on market forces. I think the three main ones are the increase of exports from Africa, the need for import replacements, and the consolidation of retailers in large cities. We have been growing our pipeline and our average deal size between 3 and 4 in 2021, and we have 100% of returning customers on the latest tech version. And at the moment, we're really trying to close a convertible round with an additional $600,000 to grow our sales and try to evolve the business model while preparing for a Series C in 2023. And I would stop there. Thank you.
Great. Perfect timing. Just about to cut you off. Thank you very much, Michele, for the presentation. Over to the investors.
I'll start. Thank you. Gosh, that went by so fast. I was like listening and I was like, wait, I want to know more. So Michelle, Julian, team, thank you for solving a really important problem. I'd like to say that first, right? I really appreciate the fact that you're solving a real problem that is important to not only the individual customers you serve, but the overall ecosystem. So I really appreciate that. And also, I took a quick look at your page, your web page, and I loved the fact that you also had a product configurator. Just the idea that, customers can really understand, potential customers can understand the different options and kind of pricing and really customize it to what they think their needs are before they would even talk to you, right? Now, assuming they have access to that, I just thought it was a really smart idea. I would love to hear more. So it sounds like you've got a great customer base, that is a repeat base. But tell me, the first time you have a customer, what is their situation? Do they have these facilities? Are they upgrading the facilities? Are they growing kind of their land use, and so they need to add facilities? I would just love to understand kind of the first time a customer comes to you, that farmer, what does their infrastructure look like at that time?
I would probably start by saying that we have three key segments. roughly 65% of the deals is represented by the core B2B. So let's say SME agribusinesses, and we see a fairly wide range within that segment. A lot of them are already connected to the market. They either lease or try and rent fairly old infrastructure. They have fairly inefficient technology, so they have some access to technology. They are somehow already linked to the market, so they already have volumes, assignment, buyers agreements, but they're really like trying to grow, and as well with some difficulties on the access to capex for investing in infrastructure that can be quite expensive. And so for them as well, one of our key thoughts is around making the assets affordable over the next number of years, trying to really make the assets repaid in a much longer period than what is needed to break even on that asset. And at the same time, as I was saying, building as many efficiency in the technology as possible to reduce their OPEX, and allowing them to have solid real-time data to control their throughputs, the quality of their product, reduce rejection, so have control on their business. Mitch, I don't know if you want to add anything.
Yeah, I think that's absolutely right. The other thing I'd add to that is, as we get down the layer and try and service smaller customers, that's when it gets even more interesting. And that's when you get into the customers who have got ramshackle, rubbishy cooling. And like, I've been out with these guys, and they may well have a cold room that's been put together by like 10 different pieces that they can't service, doesn't actually do what they need. And I was out with a farmer just a few weeks ago that we've done 20 farms near Mount Kenya, and this guy's just blown away by what we've done. And the truth is, now we gave him a 25 square meter cold room. He worked his kind of butt off to kind of get that. This year, now he's got enough with us so we can finance him, and he's expanding with that. So typically there is like a bit of a journey on there. One of the challenges like Michele and I are really trying to work on is, how do you get down into the that smaller scale, right? That's really, really the question I want to get to, because that's where you can impact the loss rates once you get down there as well. For me, I actually think the work that Michele and Co have done on the technology is superb, right? We've got good tech, we can do the technology. Of course, we make it better, but that's not the challenge. The challenge is the business model and the financing, and that's what we're kind of working through today. As with 2 customers today, and both those customers are blown away by the way we're starting to talk to them about kind of linking repayments to their output, which is just unusual in what is frankly actually quite a conservative environment. So, yeah.
Hey, can we guys, thank you so much. It's really fascinating. Can we just talk a little bit about business model, right? I'm looking at your website now. You seem to have lots of different strands. It looks like there's an asset financing piece, there's a cloud computing piece. Just talk us through the business model and where's your revenue coming from? And I also want to talk a little bit about the finance piece, because, well, the 2 bits, right? So one, is it kind of asset light, asset heavy? How do you finance? Where's the growth coming from? I'm just confused where you sit within. You're not a typical tech company. You're not a typical asset company either. You're not a bank, right? So in my head, I'm trying to pigeonhole you. Perhaps I shouldn't be pigeonholing you. I'm trying to understand how you fit in with all of this, right? And then what are the margins? Where are the margins? What's your growth? Look, lots of questions, but do you understand where I'm coming from, right? I'm confused, but I'm not that clever, so you got to help me out.
Mitch, do you want to go, or should I start? I would say most of the revenues really come from the deployment of the assets. Okay, so that is the major one. So we are selling on to customers, and then those sales can be either paid directly on commercial basis by the customers or partially financed. And that is really to make the access to capex easier for the customer. Then the data and other services like after sales services are really starting to generate more and more recurring revenues. And so especially this year, we have specific objectives to try and ramp up those recurring revenues. We have as well done several pilots to try and shift more and more the business model towards an OpEx-based one. So we started, for example, linking the repayments of the units with the payments that our customers receive from their off-takers, especially when they're overseas. And so we're going to concentrate really the next 3-4 months to try and validate what the pivot or what the next step in the business model can be, to shift from probably selling those assets to try and have a much more OpEx-based model where it all becomes recurring revenues. And so shifting more from the beginning as a tech company, selling assets and doing projects, towards probably managing much more those assets. And one of the key reasons why we can do that, because we learned how to do refrigeration, but we knew even from before what the problems of our customers were. We were coming as a background from being embedded in the type of supply chains and networks in which they operate. And so we know that in terms of advisory, in terms of solutions, in terms of understanding how those assets needs to be operated, we have a very deep knowledge of that.
And so where do the assets sit? Whose balance sheet? Who's taking the risk on the asset, and who's taking the risk on the financing?
At the moment, it's mainly us, right?
Okay. And how are you financing
on the finance? Yeah, the finance side, we have a finance partner that we work with at the moment. We're also trying to work with Untapped as well to get some smart assets.
Smart asset financing. Absolutely.
Yeah.
By the way, I'm an investor in Untapped, so I'm very happy.
See, Raj, how it all comes together, Raj. It all comes together right here on the show for us.
Yeah. We drove off a farm today, actually, after having seen this incredible little farm out in Nevada. And my first comments were like, we need to talk to Untapped. So yeah. I think that's the future, right, guys? And so we again, like, we know how to design really good stuff. We know how to build really good stuff. And the challenge for the industry often is, how do you know finances? The finance is an enabling function for us. And that's where we can get really innovative. Maybe I didn't say a bit of my background. I just spent the last 5 years working in various kind of C-level positions in M-Copa. And so I'm quite used to this idea of like, what is M-Copa, a solar company, or is it a bank, or is it a product company? And I kind of don't care. Like, what's the right system here that will work for our customers? And we do have like pretty wildly different customers, right? So our smallest unit is like 15 square meters. The biggest unit we've deployed is like 2,000 square meters, right? So we do have quite a lot of variability in there. And the approach has to be different for each of those.
Hey, before I let Laurent, I just had one more question, which I suspect. Could you talk us through your numbers, please? How much have you raised before? What's your numbers? What's your revenue? Are you EBITDA positive? All that sort of stuff, margins, etc. Please.
I can be quite brief. Since we're being broadcasted, I will not disclose margins, but so far we've raised roughly 6 million euros. At the moment, we have a valuation pre-money of 13 million euros. Sales last year have been probably lower than expected at 1.5 million, with a growth of 20-25% over the previous year. And the plan for this year is to at least triple sales, plus, as I was mentioning, validating new business models with different type of clients, and ramping up the recurring revenue side, both on sales and services.
The one thing I just kind of put on that last one, Adam McKinley, who slightly underplayed some of the performance of last year, right, is COVID's a major factor for big CapEx type infrastructure investments. But the interest we had in Spirit Farms last year was wild. So the previous year, the value of the quotes we issued in 2020 was around about 15 million worth of value, right, whatever. The value of quotes we issued in 2021 was 73 million. Wildly different. And there were some ambitious people in there. Some of those projects have come off, some they won't. So we have got long lead times. We will convert a whole chunk of that. So the expectations of 3xing sales in 2022 seems extremely reasonable to me.
Okay.
Hey, thanks, Raj.
So, guys, first of all, congratulations. You guys are, doing really good things, especially for emerging markets, and especially in Africa. You said you're working right now in 2 countries. In terms of that's concerned, are you which countries are those, and what targets do you have to ramp up in others? What are the competitors that you have in that space? And also, just give me, an idea, why you opened that company. Why was the main driver?
I would start from the last one. Actually, your country has something to do as well with that. I was working with other colleagues in Latin America and the Caribbean, and we had a small investment fund. A lot of the investments that were made in post-harvest were not exactly what we expected. And so over a very, very long discussion, we said, but what if? And the following day, we resigned from that old occupations. So it was really out of experience from a different angle in working on, on post-harvest, mainly Latin America and the Caribbean. In terms of countries of operation, at the moment we have 100 units deployed in 10 countries. We're about to hit the 11th in Africa. We're working in East, Western, and Southern Africa, with Kenya being the anchor market for Eastern, Zimbabwe for Southern, and West Africa just started this year, but with Ghana as a that is developing as an anchor market, and that is the way we operate. There's countries like Kenya and Zimbabwe where we have a much stronger direct presence, and we're trying to expand, building partnerships on services, on delivery, on project management, with local companies that previously would have been considered competitors, while we're really trying to partner with them to make the market bigger. We play, as Raj as well was saying, type of different roles, and that enables us as well to put ourselves, in the not as competitors of the kind of small developers and installers or small and medium that you can find in countries, but as partners that would allow as well them to grow with a better commercial and technological offer.
Got it. And the competitors?
In terms of competitors, I would say the market is pretty fragmented. Besides South Africa, where the land holding is 1,000 times the average in Africa, so it's a completely different dimension. But in most other countries, we're talking about a number of fairly small companies that have a more or less fragmented supply chain. Then there is 2 or 3 bigger actors. In our segment, I would say, on our core segment, I would say that there's 2 or 3 companies, mainly from Europe, that we're competing with. I do believe that in terms of business model and technology, we are better. And so, part of the idea is to, keep gaining market shares. Then there's companies that do really kind of global contractors, global service, but that is, we just have a small overlapping of their smaller facilities with the largest that we do. And I believe we're becoming more competitive as well on that segment. I mean, I will be able to tell more over the next couple of months, hopefully. But to give an example, we just delivered 2 months ago a fairly small refrigerated airport terminal for a capital city in West Africa.
Great.
Hey, Michele, can I just jump in on? Sorry, can I just jump in on one point Michele made, right, which I think you should be sharing about, Michele? So one of our key competitors, we've just taken their director of sales, has come across to us. The reason they came across to us was because they saw us as being massively more innovative, and just far more exciting about the way we're going about it and the way we're trying to get infrastructure onto the ground. So yeah, that's good. Yeah, I feel like we've done some good work with one competitor. There's another one out there we'll continue to kind of battle out, but we are way more competitive. They don't have data, they don't have the financing, and they're also based remotely. So I think, yeah, I'm feeling good on that front.
And key point for us is going to be Fruit Logistica Berlin, 5th to 7th of April this year. You're all welcome. There's going to be, you know, a lot of fun as well at the booth. We are in the Africa stand, so please come and visit us if you're in Berlin.
Excellent.
I just
Can you
have
repeat
two-
the name of that conference again?
Fruit Logistica is the largest global trade show for fresh produce, where the trade happens, where the technology is displayed. So I mean, I think the year before COVID started, it was something like 375,000 people over 3 days, 8 hectares of fairground. So it's big.
Thanks. And
Jim,
there's a couple of connections from the audience, and then we'll pass it back to additional questions. One final questions, and then we'll wrap things up. We have a note from Riki Yamauchi. They're a VC based in Japan and have strong networks with large trading firms and conglomerates. And they also have the conglomerates have an interest in cold chains. Please get in touch with Riki after. I think that intro will happen automatic. Back over to you, Raj.
So just a couple of things I wanted to just get my head on here. One is your customer acquisition strategy and your typical customer, and 2 is your burn rate. Yeah, those are the 2 things I just want to get my head around.
I'll just speak quickly on the customer acquisition. Depends a lot on the country. We have done massively well under COVID with content-based marketing over webinars, with really high attendance rates. We're talking about in over 6 webinars, we've reached over 4,000 individual participants. So really high participation. Social media marketing and optimization of SEO has brought in a lot of leads. Then in anchor markets, it's as well through referrals. I mean, a lot of agribusinesses share, the trade shows, the same input suppliers, the same advisors. And so, these being embedded in the network, and I'm talking specifically about Kenya and Zimbabwe, and having had satisfied customers has brought in as well some of the most important customers, the ones that in agriculture are the ones that others look up to or try to imitate, which is one of the things that we are most proud. So at the moment, out of for example, the 5 top exporters in Kenya, 3 of them are already our clients. So that speaks a bit on customer acquisition. We are going to go now. Fruit Logistica is going to be another very important milestone. And after that, we're going to resume more, social media-based marketing campaigns, especially because social media are giving a lot of freedom to farmers, especially in areas where they're not so close one another. And so there are many farmers are extremely active on social networks. Maybe I'll let you, Mitch, to speak about the burn rate.
Yeah, the burn rate. This obviously, this convertible note gives us considerable extra runway. I don't want to go into obviously all the details on this platform, which I'm happy to talk to you afterwards and give you all those details. But this will give us, I think, it's an additional way over 40 months for us to move on. So there's a lot of comfort once you've done it. Again, I felt very kind of comfortable with the fact that 4 of our key investors reinvested in both myself and Michele as a management team. So yeah.
Well, great. Thank you very much, Michele and Julian, for your presentation and your answers and discussion. I'd like to go back to the investors for last words, last thoughts. Would you invest? Lori?
Sure, I'll start. Our investment thesis isn't completely aligned with Inspira Farms, but having said that, what I love about this is, in my opinion, a very typical but impressive entrepreneurial story where you're not only innovating in the product and service, but in the business model. And I can't imagine having two better people to do that. Michelle, with your sector experience, and Julian, with your business model experience, pay-as-you-go, smart asset, financing, revenue sharing, whatever it is. I think you guys are so well suited to continue on this success that I'm really optimistic and positive about what you're doing.
Thank you.
Thank you, Laurie. Raj, what are your thoughts?
Yeah, so listen, first of all, again, I think I'd like to echo what you're doing is incredible. I think we need more companies like these to service what I would see as a very underserved part of the economy throughout Africa. I think to a certain extent that I have similar comments, Laurie, that we are kind of pre-seed to Series A investors in tech and tech-enabled. And I feel your business model is a bit too asset heavy for what we're doing. That may be unfair, but that's kind of the way I see it right now. I know the M-Kopa story very well. In fact, the current CEO of M-Kopa is a good friend of mine. Mayur Patel, I don't know whether you know Mayur or not, but he's a good guy. I think the experiences M-Kopa has gone through, I mean, I think you probably have got the scars to bear as well as the fruit to show, perhaps. So I think that will stand you in very good stead. So I think that's great. Look, if there's any way I can help, my business partner Vishal is based in Nairobi. I'm happy to try and set up something to see whether we can help beyond just giving you cash. But I think it's a no from me from an investment perspective.
Sarah.
Thank you, Raj. And over to you, Laurent.
Yeah. So basically, I have the same issue. We're investing mostly in tech and in Africa and the Caribbean, so it's a little bit outside of our thesis. But also happy to help, especially in Ghana, where in our other businesses we're very well established there. So and in many other countries in Africa. So so maybe we can start a cooperation that side, but on the investment side, we'll have to pass for now.
Excellent.
Thank you very much,
Thank you.
Laurent.
Yeah,
Yes,
understood.
Go ahead, Julian, please.
No, just saying understood. Yeah.
Yeah, I think there's always a challenge, and I think this is great discussion around companies in Africa that are capex heavy or very much focused on building things and providing services with those things. I know in the VC world we're very much focused on asset-light, winner-take-all business models, but I would argue that so much of Africa will need to be fueled on new infrastructure.
Yeah, for sure.
Yeah, absolutely.
And not trying to pitch Untapped again, but I think somebody needs to go after that market opportunity. So we're trying to.
And Jim, I think.
Jim,
I think you're absolutely right, and kind of I almost feel bad that I'm not doing investment in the space, because I think we're small checks, we're writing big checks. The guys with the big checks, the impact investors who say that they want to change the world, but perhaps you're the typical company that should be able to attract these impact investors who want to make an impact, triple bottom line, all that good story. So I don't think we certainly in our case are that your target investor, right? Your target investor is an impact investor who's really trying to look at it from a different lens, and someone who understands this supply chain issues that are massive across Africa and logistics and the whole agriculture space, which we don't have very much experience. So I think perhaps, unfortunately, we're the wrong angels for you, right? Not that you're not the right company, we're the wrong angels. That's all.
Yeah, and then the comment on that is I think some of this is very much around the kind of investment model that investors are investing through. And so I think getting to the right investment models, getting to the investors with perhaps slightly different investment models than your typical VC investor, I think it will really be the trick. So we have a comment from Oleksii Ignatiev. He runs a large 2,000 plus LP syndicate on angel list focused on crypto. well, maybe not so relevant for Spirit Farms.
Might be better for Aaron, I think.
I should have read that before.
I think it might be
announced it.
targeted Aaron rather than
Yeah,
Michelle, Michaela, and Julian.
indeed. All right. Sorry about that. Well, thank you very much, Julian and Michele, for the presentations, and thank you for all the investors for your feedback. We're at the top of the hour today, and thanks to all of you guys for being here. Thanks to the audience as well. And please don't forget, we host this session every month on the third Thursday of every month. And we also have in-country events throughout Africa. Our next event will be in Cape Town, South Africa, where we'll be hosting investors from around the world in May. So if you're interested, please get in touch with us, or you can contact us through our website, untap-global.com, or follow us on LinkedIn. And with that, thank you everybody for participating in the show today, and we hope to see you at the next Nest.
Hey, we didn't do the karaoke, Jim.
Let's break out a song.
We'll do that after everyone leaves.
I didn't forget.
Well, on that note, then, perhaps we can choose a bit of a